Asian shares wavered as investors worried that U.S. inflation data this week could derail the outlook for lower interest rates. The main data event of the week will be the U.S. Core Personal Consumption Expenditures Price Index, which is due on Friday, and that's seen rising 0.3% in February, keeping the annual pace at 2.8%. Anything higher would be taken as a setback for hopes for a Federal Reserve rate cut in June. Many markets will be closed for Easter on Friday when that PCE data is due for release. So the full reaction will have to wait until next week. Locally, telecoms operator MTN reported a 72.3% tumble in full-year profit as a sharp devaluation in the Nigerian naira pushed its biggest unit, MTN Nigeria, to a loss. To give us more perspective on that particular story, as well as look at the markets in terms of what we can expect for the week, we are joined by Simphiwe Litlojana, who is an investment strategist at Absa Investments. Simphiwe, thank you so much for your time. And as I mentioned, the biggest probably event for the week is that PCE data for Friday. But as we kick off the trading week, what's the market sentiment?
Thank you, Nastasha, for having me on the show. I think when we're looking at markets today, we can see that there's a bit of red, especially when we're looking at our local markets, seeing a bit of red across all the different sectors. Of course, in terms of the general expectation as far as our global markets are concerned, especially when we're looking at, the interest rate decisions, we did see last week the Bank of England as well as the US Fed both keeping interest rates unchanged. And also, I think the key thing that markets were looking forward to is in terms of the forward guidance. And I think the guidance that we got from the US Fed is that we can still expect some rate cuts this year, as the median dot plot has not changed, and you're still looking at about 75 basis points in cuts this year. But of course, the key catalyst for those continue to be data as it unfolds, particularly when you're looking at US inflation and any indicators of where that might go. And of course, unemployment still fairly strong, as it's still below the 4% mark, and we're still seeing some good and fairly robust economic growth from the US.
We'll come back to the central banks in a bit, but let's bring things locally. We saw results coming out of MTN as well as Advtech, but let's start off with MTN. What were the key takeaways for you there?
I think with MTN, of course, we did see revenue that was up about single digits, but I think the big impact in terms of the overall earnings, so the bottom line, being the impact of the currency devaluation in Nigeria. Of course, Nigeria is quite a big portion of the earnings that MTN has, so it contributes quite a big portion of the overall earnings. And we did see, those earnings decline by more than 70% on the back of some of the currency devaluations that we saw in the Nigerian naira last year. But overall, when you're looking at some of the divisions, especially from a revenue perspective, both the Ghana division and the Nigeria division, from a revenue perspective, still looking fairly decent. But of course, the negative impact of the currency was quite a detractor.
Advtech was another one, as I mentioned, that released their full year numbers, that share price up 0.7%. But if you had to talk about an Advtech versus Stadio, which do you prefer here?
I think when you're looking at both companies, they did release fairly decent earnings results, both up by double digits from both the revenue and earnings perspective. But I think the key difference between Advtech and Stadio is that Advtech is slightly more diversified, so they operate in schooling, higher education, as well as some resourcing divisions, whereas Stadio is their key competitor, but only in mostly just the higher education, so the private tertiary institutions business. And you can see just from a year-to-date market performance perspectives, Advtech is outperforming Stadio, so markets looking to, slightly favor that more diversified business model for Advtech.
While we're looking at SA companies, let's unpack the ones that we assume to be the bellwether for the SA economy. If you're to look at some of them that have released their earnings recently, what has been the overall guidance here? What do you make of the numbers brought forward?
I think it's been an interesting earnings season, and of course we're looking at some of the early indicators or the leading indicators, or they give us a bit of a closer sense in terms of how our economy is operating, looking at the likes of retailers. Definitely seeing some consumer pressure there. Of course, most of them posting volumes that are volume growth that is fairly muted. But of course, in addition to that, there are other challenges that the retailers continue to face, and those stemming from load shedding as well as some supply chain issues, so logistical challenges, and those, of course, permeate across many other sectors as well across the country. And then, of course, when you're looking at it from a consumer point of view, we did see banks also last year still posting fairly healthy net interest income, benefiting from that endowment effect. But what we are starting to see in the high interest rate environment is that credit demand as well as credit quality is beginning to be hampered, as we have seen increasing in provisions, but at the same time also seeing private sector credit extensions beginning to slow as consumers continue to face a bit of strain.
The last time you and I spoke about central banks, I asked you what was more important, whether it was the why central banks were cutting or the when. My next question is, which is the biggest risk here for central banks? Is it too soon or too late when it comes to interest rate cuts?
I definitely think it is quite an interesting one, and I think it actually is both too soon and too late pose their own various risks. So in terms of them cutting too soon, the key risk there is, of course, resurgent inflation. So cutting whilst not necessarily seeing those strong indicators that inflation will indeed be anchored lower. And so the fear there is that you might begin to see a resurgence in inflation. And now, of course, that coming against the backdrop of potentially slower economic growth, so putting them in a bit of a tougher environment from a monetary policy perspective, as you do have a bit of stagflation. So that's the risk on that side. And then in terms of too late, of course, the risk is that interest rates are kept higher for longer, but potentially too long, where it tips over the economy into a much more prolonged and deeper recession as a result of fairly restrictive monetary policy. So it's the tough balancing act that the various reserve banks are facing.
All right, Simpiwe, thank you so much for your time. That is Simpiwe Letlojana, who is an investment strategist at Absa Investments. After the break, I have the conversation with the CEO of Advtech, so stay tuned. Private education group Advtech reported a rise in earnings for the year ended December. Schools SA grew revenue by 13%, with students enrolled standing at 41,000. According to the group, all of its school brands in the rest of Africa continued to experience strong enrollment growth and were operationally sound. For more, we are joined by CEO Roy Douglas. Roy, thank you so much for your time. Let's talk about what underpinned this period's performance. What were the drivers?
Well, as always, the key driver for our business performance is obviously enrollment growth, and we've continued on the trend of the recent past with strong enrollment growth, and I'm very pleased to report that, in fact, that trend has continued into 2024. Obviously, the results we're reviewing are for the prior year, 2023, but looking forward, we've had another good performance on enrollments, with our schools in South Africa growing by some 5% and our tertiary business by 7%. So that is really critical and certainly is the underpin for good results. On the other hand, strong operating performance in terms of our drive on efficiency and the effectiveness. So we really have been able to really gain operating leverage through that volume growth. And then, of course, an unrelenting focus on academic excellence. And that is really critical to the reputation, which obviously is another key driver of enrollment growth. So all across the board, we're really pleased with these results.
How are you thinking about fee increases when you look at the SA schools versus the rest of Africa schools?
Look, we are always comfortable that we will be able to recover our cost inputs. Therefore, inflation is obviously an important pointer for us. However, we have for a number of years now been adopted what we call responsible pricing. We recognize and we understand, firstly, that here in South Africa, consumers are under massive pressure in terms of disposable income. Our economy has underperformed, unemployment levels are high, and we do appreciate that life has been difficult for consumers in the light of that kind of a performance. However, across Africa and in our home base, private education is expensive, and therefore we have really focused in terms of trying to ensure that we provide the best possible value that we can. And we followed a number of initiatives in our business to try and eliminate any kind of duplication and wastage that exists. And we've been determined to try and pass that through by way of responsible price increases. So, for example, here in South Africa, we're now even questioning whether we might be able to price slightly below inflation, given the success that we've had on a number of efficiency drives in our organization and our determination to be as absolutely tight in cost control as we can. And I think that's delivered very good results for us, and it will certainly influence the way we look at future price increases.
I can imagine one of the questions you always get in your analyst roadshows, etc., is whether you're still susceptible to immigration. Does that still remain a factor in this period? Are you able to give us a figure in terms of where it stands right now?
Look, we certainly, it is something that we monitor. It is a question that we're asked a lot, and it does have a negative effect in terms of our overall position. However, we strive to make sure that we manage those elements that are within our control. If a family has decided to immigrate, there's little that our organization, our management teams and schools can do about that. Likewise, if people do come across economic hardship and are unable to afford the fees, that's not the problem of our operation. So we focus on the elements that we can control, and our teams have done an outstanding job on reducing the number of losses in our business from those perspectives. So it does remain an area of concern, and certainly we have seen an increase in immigration. But I remind you, the numbers that I've quoted are all net of those kinds of departures from our system. What we have seen over the last years, interestingly enough, is that whereas I think 4 or 5 years ago we used to see a decline between the start of the year and the end of the year, there was a sort of a trickle wastage. In the last couple of years, we've actually managed to hold the numbers of students within our system to the similar levels, and sometimes even increased towards the end of the year versus the front of the year. So whilst it remains an issue, it is of course a concern. We would rather that was not happening, but I'm very comfortable with our business's ability to manage around that problem and still show positive volume growth.
The last time you and I spoke, you mentioned that the resourcing division was almost a tale of two cities. Is that still the case?
Very much so. We haven't finished that book yet. Unfortunately, the South African environment remains incredibly tough, and our teams have done an excellent job just to sort of hold their heads above water, if you like. But it does mean that the decision to look at other geographies and other markets has really supported that business. And you can see by the level of growth that we've reported in our resourcing division that it has performed extremely well. So it does, again, I say, remain a tale of two cities, tough South African local conditions. Our team's doing the best they can in a very difficult market, but a very successful rest of Africa business where we've continued to grow and improve the profitability of the organization in those areas.
Before I let you go, where are we when it comes to those Department of Higher Education criteria in terms of seeing where you qualify to be recognized as a university?
We've had no further progress from the department. We do know that they are continuing to work on those recommendations, and we're staying close and understanding the process as best we can. On the other hand, we are determined to go ahead and ensure that our own house is very much in line with what we consider to be any kind of reasonable assessment of the university. And there we're very comfortable with the progress that we're making. In fact, we're making quite exciting progress. And therefore we'll stay abreast of it. But there is no further notification from the Department of Education as to what those criteria will be.
Roy, thank you so much for your time. That is Roy Douglas, who is the CEO of the Advtech Group. We're going to take a quick break. When we come back, we'll have more of your news, so stay tuned.